Okay, last week or earlier this week, we discussed the US dollar index, and this is the FXCM US dollar index. What we're seeing on this is a long trend up that culminated really around March, mid-March of this year. Since then, we've seen basically a pennant formation. So what this is, here's the pole of the pennant, and then we see a converging triangle here, starting in March. Pattern of lower highs, as well as a pattern of lower highs, price consolidating. Now, this could suggest, that ultimately a breakout's occurring. Either the market is consolidating its gains all the way going back to November and is going to gear up for the next leg up, or that it's going to come back down. That's sort of the basic idea. In some ways, you could trade this would be to speculate on the volatility rather than picking a direction. If we look at the dollar index, we can get an idea that, which is heavily biased towards the euro. We see that price is already headed down. This doesn't really look like a flag pattern anymore, a pennant pattern anymore. It looks more like a descending triangle. We have a horizontal support line as well as a downward trend line marked by lower highs. So from that perspective, when we see the futures dollar index, which as I mentioned is more heavily weighted towards the euro, in a clear downtrend, when we look at the FXCM dollar index, which is more neutral, the U.S. against the basket of currencies, not really heavily weighted in one direction, we can say, well, if the futures index looks like it's headed down, this might be a breakdown as well if we did want to speculate on a direction. And then, so that's sort of the backdrop. When we look at dollar Canada, I thought this chart was really interesting because we see that same sort of pattern of a really pronounced leg up, right? Starting, you could say it goes back even further, but you could definitely say that from June of 2015 up until August of 2015, so a little over 2 months, 2.5 months, 2 months and a week, something like that, price was pretty much moving up, and it was very clear. Then on August 15, we have this candle here, which is a shooting star pattern, I believe, where you see a hammer, a long wick pattern at the top of a trend. So normally we see a hammer at support, an inverted hammer or shooting star is when we see that same pattern. Let me zoom in a little bit. That same pattern at the top of a trend, which is what we're seeing here. And that often signals a reversal. Since then, we've seen a pattern of lower highs, and now this looks like it could be a pennant pattern. It looks like, here's our flag, here's our pole, and here's the triangle prices converging. So we could speculate on a breakout and a drop down. And I think there are some interesting trade opportunities here. Basically the situation with dollar Canada, it looks like it could be an interesting time to sell any rallies. In terms of a basic trade setup, you could look to short at 32. You could have a target, multiple stops along the way. 29, I'd say 29.50 is an interesting target, as well as, an even better target down here, 27.80. Of course, you'd want to put your stop probably above this high. This is the, the rallies. I'm looking at this as a bearish checkmate, where since this is the high and price hasn't been able to get past it, if price got up to, say, 33.75, then, the idea was proven wrong. You could even say 33.60, 33.55, something like that. You could say the trade was proven wrong. 33.60 is, right now we are at 31.90 basically. So that's 170 pips away. From there you can sort of calculate what's a good reward risk you want. Maybe you want to target down here, 27.80. You could try even lower. Another thing is that once you break out, let's say you entered here and then if you broke around, and once the price reached 30.50, once you broke down below this triangle, you can move your stop to break even. So something to bear in mind. Like I mentioned, what I think is interesting about this setup is that we're seeing a similar pattern on the FXCM dollar index, and I think it's a favorable reward risk setup, which is something that I always want to look for, and I think is a good trading behavior. It's not so much about always being right, but finding those setups where the risk is low and the potential reward is high. In this particular setup, you could enter at 32, 32.20, and set a target profit. Really, it's conceivable that it's going to go down to support here at 26. So that's a pretty good reward risk if you just put your stop at 33.60, something like that. That's about it. Any questions you have, anything you want to add, join us at informedtrades.com. If the concepts presented in this video are unfamiliar to you, we have a lot of educational material on informed trades. Check it out. Like this video on YouTube, share it on Facebook, Google+. That helps us out a lot as well. Best of luck in your trading and investing. We'll see you next time. Take care.